Lower tax rates.
Higher standard
Elimination of exemptions.
Limitation of deductions.
New tax forms.
Higher tax bill.
New
Limitation
tax
of
forms.
deductions.
Stop. You know the results from last year. Now, take action. Here's what you need to know for 2019. The shifting sands stand still. Adjust your withholdings if your year-end tax bill required an unexpected payment. Millions of taxpayers were caught up in an IRS federal withholding calculation error. A simple review of your situation and a new W-4 with your employer can reduce or eliminate this problem for you. It's not as simple as it seems. You've discovered that the new postcard-sized 1040 tax form is more complicated than ever. In 2018, the 2-page form became 2 pages and 6 new schedules. For 2019, the form has changed again. The new version is slightly larger and has 3 schedules instead of the original 6. The new form makes it tougher to see and understand the flow of how your income turns into your tax bill. To solve this problem, divide your total tax by your total taxable income to calculate your effective tax rate. Then compare it to last year's tax return. If it's going up, please ask for a review. Change is still in the air. 2019 marks the following key tax law changes. There's no longer a tax penalty for not having health insurance. Starting this year, the uninsured will only feel the pain from health care providers instead of from the IRS. The health expense deductibility threshold moved from 7.5% to 10%, making it harder to deduct your medical expenses. However, a late-breaking tax change on December 22nd of 2019 changed this rate back down to 7.5% of your adjusted gross income. Any new divorce decrees that contain alimony will not be deemed income by those that receive it, nor as a deduction for those that pay it. This change does not impact agreements established prior to 2019. For those in the IRS Identity Theft Program, you know to look for your one-time use PIN in the mail. In the past, you could only get this extra security if your identity had been stolen. But now, the IRS is making participation in the program available to more taxpayers. You may opt into the PIN program when the option is rolled out in your state. And some good news. 2019 marks the first year in many that the annual contribution amounts for tax-advantaged retirement accounts is going up. Here are the new limits. But hold on, there's more. In addition to the lower medical expense threshold, in late December, a number of expired tax code provisions were extended for 2019 and 2020. The key changes are reinstating the tuition and fees deduction for up to $4,000, allowing mortgage insurance premiums as an itemized deduction, excluding qualified forgiven debt on a home mortgage from income, and creating an automatic 60-day filing extension for taxpayers in federally declared disaster areas. So start planning your tax-saving approach for 2019 and call if you wish to apply your newfound knowledge to this new tax landscape.